Cheap silver may be ending as U.S. policymakers begin treating the metal as a strategic input rather than a passive commodity. We believe Washington is moving towards a price floor framework to rebuild domestic silver supply while raising input costs for foreign competitors. Goldman says central banks are waiting for calmer prices while U.S. investors are chasing upside through call options and physical buying. And finally, with regards to what happened on Friday, Citi says Trump's temporary 15% global tariff under Section 122 follows the Supreme Court strikedown of IEEPA tariffs and may stay in place for up to 150 days. Ongoing uncertainty and refund ambiguity are modestly negative for bonds and the dollar, while potentially supporting gold, steeper treasury curves, and higher inflation expectations.
Cheap silver may be coming to an end, and it's not just about supply and demand anymore. Today, we're looking at a major shift in U.S. policy that could fundamentally change the pricing structure of silver and other critical minerals. Add in tariffs, aggressive gold buying, and powerful technical setups across metals, oil, and Bitcoin, and we may be entering a new macro phase. Let's break it down.
10-year yields are down 1. The dollar is up 3 after being down most of the night. The S&P 500 is 68.78, down 32. The NASDAQ is down 62. The VIX is 2034, up 1.2 points, 1.3 points. Gold is up $40 at 51.48. Silver is 86.52, up $1.90. Was up about 2.20 on the highs. Copper is down almost 4 3/4 cents. WTI, after getting hit on the open from the lack of war, is now back up around 28 cents, 66.74. Natural gas $3.34, up 5 cents and change. Platinum up 15, $16 at 21.73. Palladium $17.67, up 2 and change. Gold, silver down a little bit, and grains are all off about a penny to a penny and a half. Beans are down over 8 cents. Bitcoin down on 1,400 points, but potentially nearing a bottom. We'll talk about that in the charts today. The United States is exploring price floor mechanisms for critical minerals such as silver to support domestic industry and reduce reliance on foreign supply chains. By encouraging sustained higher prices, policymakers will stimulate, we should say, investment in refining and manufacturing capacity at home, while exporting cost pressures to overseas competitors whose industries depend on lower input prices. That story was very popular over the weekend. Citi says Trump SCOTUS counter tariffs, bullish inflation, gold. Basically, the Supreme Court shot down Trump's tariffs as being unconstitutional, and in doing so, inspired Trump to just implement the 15% global tariff, which he can do under different rules that is not Supreme Court oriented. This is bullish for gold, and that is why the market rallied on Friday. All right. Your attention to the next two posts there. Goldman central banks raise floor on the gold price, but Americans raise the roof. And CFTC American funds want the gold on dips. We found two posts. We wrote two posts over the weekend that covered this. One was Goldman had noted that Americans are, in fact, buying gold hand over fist. And if they're not buying the EFT, they're buying, the ETF, they're buying calls themselves. So there is a lot of call buying on the ETF side, and there is a lot of physical buying on the central bank side. So together, we're seeing gold, again, up almost $40 right now. Hartnett says trade oil, own gold. Uranium, too much demand, not enough supply. Uranium, too much demand, not enough supply. That's a case to just own uranium, because as a component of the cost of nuclear power, it's really not a big component, and therefore they don't have a problem paying up for it. And then you have to see the two founders post their founders special Sunday discussion note and the Sunday reading pod. Over the weekend, in reaction to Donald Trump's reaction to the Supreme Court ruling, UBS put out a piece. We titled it, Sees Gold Rallying Towards 6,200 on Tariff Troubles. So basically they upgraded their targets, and they see the combination of tariff uncertainty with a need for the Fed to ease as being even more supportive for gold. And remember, UBS has been very conservative. So assuming that they're still conservative, this is low. Assuming that they're getting a little bit more aggressive, well, I think they're a little bit tired of being behind the curve with other banks. They don't usually stay at a higher price target than Goldman for long. So be aware of that. There's four markets that are up. Top right-hand side, gold, silver, lower left-hand side, WTI, and Bitcoin. Let's start with gold. There's your dip buying, knife catching, knife catching, knife catching, knife catching, and now the market is higher. So it looks to me like there really aren't any shorts in gold. I mean, there really aren't any sellers in gold. There are just shorts. People who either want to buy it or need to buy it, not necessarily shorts per se, but everybody needs the gold. Everybody literally needs the gold now. And it's for collateral purposes. It's for HQLA, which is going to come down the road. It's for repo. It's for insurance purposes. It's for a replacement for U.S. Treasuries. And these are real threats to the U.S.
Let's start with the market snapshot. 10-year yields are slightly lower. The dollar is up after overnight weakness. Equities are under pressure. S&P down 32, Nasdaq down 62, VIX ticking higher. But metals? That's where the action is. Gold is up $40. Silver surged nearly $2 and was up over $2.20 at the highs. Platinum and palladium are firm. Oil sold off on geopolitical de-escalation, but quickly reversed and is now positive again. Bitcoin is down sharply, but potentially nearing a technical inflection point. Now here's the real story. The United States is reportedly exploring price floor mechanisms for critical minerals like silver. This is a big deal. If implemented, it means policymakers are no longer treating silver as a passive commodity, but as a strategic input. A price floor would encourage sustained higher prices to stimulate domestic refining, mining, and manufacturing capacity. At the same time, it would export cost pressures to foreign competitors who rely on cheaper inputs. In simple terms, the era of structurally cheap silver may be ending. Now layer in tariffs. After the Supreme Court struck down prior tariff structures, a new 15% global tariff framework has been implemented under different authority. Markets are interpreting this as inflationary, and gold responded immediately. On top of that, central banks continue physical gold buying. U.S. investors are aggressively buying gold ETFs and call options. Major banks are raising gold targets, some projecting significantly higher levels on tariff uncertainty and potential Fed easing. Technically, gold looks extremely strong. Every dip is being bought. There aren't natural sellers, only buyers waiting for pullbacks. Gold is increasingly being treated as collateral, high-quality liquid asset, HQLA, insurance, and even a treasury alternative. Silver's chart is similar, but earlier in its breakout phase. If silver clears the 89 to 90 zone, momentum could accelerate toward 94. Above 94? There's very little resistance overhead because the prior move down was a collapse, not a structured distribution. That means limited supply waiting above. Oil is acting constructively, rising even on bearish news. That typically signals underlying strength. Bitcoin is in congestion. Above 71,000 looks bullish toward 90,000. Below 65,000 turns fragile. It's setting up for a potential volatility breakout. The bigger picture? Metals are no longer just trading inflation. They're trading policy. They're trading geopolitics. And they're trading structural supply realignment.
Silver is a similar formation, although at a lower area, which, by the way, I know that everybody who follows our work here knows that I'm bullish neutral as opposed to being neutral bullish, which I was a week ago. And I'm getting a little more bullish as we rally. I'm taking my position and I'm just kind of skewing it a little bit more bullish. And the reason I'm doing that is because if we get into this area here between 89 and 90, there's a good chance we could skate again up to, I can't believe it, 110. But what I feel, my opinion doesn't matter. This is what the chart says. If we get above 89.90, we could skate to 94, and then above 94, there might not be anything in the way of us going higher. I wouldn't call, I want, those of you who are familiar, I want to call this a measured move. It's not, because you have all this here above you. But the thing is, we didn't really work coming down. We just collapsed. So there's really not going to be a lot of selling in here. There really isn't. There's going to be buying. See this long candle in here? There's going to be buying. There's probably not going to be selling. All that selling got out in here and then got out in here. It really would be something to behold if we got above 90 and then got above 94. But wow, very good, very good, very encouraging. I'm just giving you the numbers. My position keeps getting more and more bullish as we go higher, which means I'm watching when the market gets to 90, if it gets to 90, how it acts. And then I'll either go all in, parlay, or take profits. It depends. WTI wants to go up. And that's an abused cliche. People say what it means is that this is bearish news, the fact that we didn't have an attack with Iran and oil sold off, and now it's back above unchanged. So on bearish news, the market is responding very constructively. And on bullish news, this thing will probably rally a couple of dollars in a heartbeat. So constructive on oil. It wants to go up. Bitcoin, not calling the bottom. I am saying, though, that it's on our radar now. It hasn't been on our radar in a long time. The radar now is above 71,000 and change is probably very bullish, up to 90,000, and below 65,000 and change is probably very bearish, especially if it gets below 56. So we're in a congestion area now. It's catching its breath, and it's setting up for one of those VBS moves that I like to talk about so much.
If the U.S. truly moves towards strategic pricing support for silver, this could mark the end of the cheap metal era. Gold remains structurally bid. Silver is tightening technically. Oil looks constructive. Bitcoin is coiling. We're watching key levels closely, especially silver around 90. If we break higher, things could move fast. Stay sharp, stay prepared, and I'll see you in the next update.